Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, February the 6th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. But at the end of the day, I am here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Across the pond, we got German manufacturing, and it came in, German factory orders came in at a negative 1.6%, expected to be a positive 0.3%. Now, if you remember last month, we also got a much lower than expected reading at a negative 1%. They did revise that one up to a negative 0.2%. So a nice revision to last month's number, which was pretty, startling or not good to look at, I guess. This one following suit with that, just negative factory orders is not good going forward, especially for the global economies. Germany being one of the major manufacturing sectors of the European region. Then we flip back over here to the United States, and we got crude oil inventories, and that came in line with expectations at 1.3 million barrel build, expected to be right in line with 1.3 million barrel build. Last month's number not revised at all. And something to say about this, we are seeing a continuation build. We had that one build a couple of readings ago where we were about 5-6 million barrels over. We're continuing to see these crude oil numbers start to build. We, beginning of the middle of the summer, we saw some drawdowns going on, which is where we would not necessarily expect the drawdowns to happen. We expect to see some of that happening more readily throughout the winter as well, with especially the colder than normal weather we've been seeing. But anyway, that being said, we've got crude oil showing a little bit of weakness with all these builds, and as we would expect, supply increases and demand decreases, prices have to go down. So that's what we would expect to see. I don't know if it's necessarily going to happen right now, but I still expect oil to be in the 50s, mid to lower 50s for the foreseeable future anyway, until we really see bad economic data or some of these inventories start to dwindle. All right, gold futures off just a little bit today. Really finding a lot of support on this value area high, which I was expecting to not really show that much support. One could argue it's the 9-day moving average causing this bit of support as well, because it lines up quite nicely with the value area high. So it is acting as support. You can count on that. If we settle below that, I think we're going to start seeing it go back down to the 61 Fibonacci level here. All right, on to the bonds. Bonds are moving higher today, more a flight to safety as equities are showing a little bit of weakness. One thing I forgot to mention later on today, we've got the Fed Chair Powell speaking, and one other Fed Governor, FOMC member Quarles is speaking as well. So that comes out later this evening or this afternoon, probably after the market closes or very close to that. Keep your eye out for that for any guidance on interest rates going forward. With some of this economic data across the pond, they might start being a little bit more dovish, which means not so keen to raise interest rates. All right, we've got the bonds finding resistance at this value area high. Again, I think it's more a flight to safety than anything right now. Let's go over to the VIX. VIX still in negative territory right now. We're seeing it's kind of really flopping back and forth. We'd like to see this get back up into the 20s, if you will, which is where I'd like to see it. But just to get that premium, get a little extra boost in this earnings season for earnings premium selling strategies. All right, anyway, over to the Dow Jones Industrial Average. It's in negative territory, higher than we were on the open, that's for sure. And then starting to look a little bit toppy. I've talked about this before. We get extended to the upside, it's going to want to migrate back to the point of control, especially on lack of volume like we're seeing lately this week with China having a bank holiday. Again, similar situation here in the NASDAQ. It's in positive territory, but finding resistance on the 200-day moving average and support right around that 38 Fibonacci retracement. So that both of those lining up, it's a tough slog, but looking very toppy if we were to finish right here today. It just looks like a spinning top doji or something. Again, in the E-mini S&Ps, very similar. We're right there at the point of control, though, in the E-mini S&Ps. But this 38 Fibonacci extension or retracement is looking like it is acting as resistance as well. Again, lack of volume due to China's bank holiday. All right. Looking at the day chart breakdown, each purple or blue section is a full day with the overnight session included. It's on the 30-minute candle. You can see on the open, we were trying to rally, but then we got this economic data and the market really started sloughing off a little bit. I don't think it was really trying to flush out weak hands or anything like that from the overnight session. I think it was more a catalyst of the economic data. And then, and as a matter of fact, you can see the market selling off on that German economic data. But now we're starting to see a bit of a bounce coming back as some of the weaker hands are trying to get shook out. But, you know, it's hard to really say what's happening right now. It's an inside day, but looking toppy is all I can tell you. All right, let's take a look at EA Sports. Now you can see at this chart, it does not look good. I tweeted out what my earnings trades were. And yesterday I decided to go into the February weeklies that expire on Friday. And I sold the 101 puts, or sorry, 101 calls and the 84 puts in there. Now you can see the 84 puts are clearly in the money at this point. So what I decided to do, because the market when it opened, we were right around that 82 to 84 area. Opened up again last night in the overnight session, spiked up to those levels. So I think that there is some bullishness in and around this. They have Apex Legends, which is getting a lot of good reviews right now. That is a gaming sport, like a battle royale type scenario where you have 60 players on either side, kind of like Fortnite where you go in and battle it out to the end. So Apex Legends, very similar to that. They think that they can steal some market share. Actually, the graphics on it are pretty cool. And getting a lot of good reviews, like I said. So I tweeted out this morning, and maybe in the toilet right now, but Apex Legends may be able to come in and save the day. I don't know if that's necessarily going to happen, but it is getting a lot of information. So with that, you can see those 84 puts are in the money. And I originally sold that strangle for $1.44. Now, with my 84 puts being in the money, I decided to roll those calls, those 101 calls in the February, down to the 82 calls. Yes, I inverted. I'm short the 84 puts and I'm short the 82 calls. That's inverted. I've locked in a loss in a sense. But with that roll, I was able to collect another 71 cents. So if you take that all together, I'm at about $2.15 total credit. I get to keep that. Now, what that does is it lowers my break even on those 84 puts to 82 or 81.85, right? So yes, I have kind of locked that in. I've locked in a profit if the market comes back inside and settles between 84 and 82. If it settles in and around 82, I've gotten back to break even. If it settles much below that, those are where I have my losses. So I think that this is going to start migrating higher, hopefully in the next couple of days, and get back up in between 84 and 82 is my idea here for EA Sports. Just trying to stay mechanical. I didn't have a directional assumption with EA Sports. I thought I leaned towards it being a little bit negative, but I've been seeing a lot of stuff about this Apex Legends coming out, so I threw a strangle in there rather than just shorting it. I thought, my original thought was with Fortnite taking market share, but Apex Legends looking to take back market share for various reasons that people are becoming a little unhappy with Fortnite that I don't have enough time to talk about right now. All right, so hopefully we can get this to move higher and get to my inverted strangle. All right, so on to Disney. Disney is a trade that I played to the upside. Again, I tweeted this out yesterday, and I went in and sold the February 108 puts in there for 35 cents. I bought them back for 5 cents. On the open, the market spiked higher. That's when I covered it. I talk about making all of these adjustments and or closing these earnings trades out early in the morning before anything else changes, especially on the winners. So Disney was able to get out for a winner. And then Cummings, I went in there and I got short the February 157.5 calls for 50 cents. I was able to buy those back for 5 cents. The reason why I went into a short position, a bearish position, is if you remember, we've had all these auto sales coming out not too long ago, and a lot of those auto sales were lackluster at best. Now, when you build an auto, what do you need? You generally need, most likely are going to need an engine in that. So if we're seeing all these auto sales come off a little bit, I was looking that Cummings would probably have some forward guidance that wasn't looking too good as well. And that was the case in Cummings. Pretty bearishness, at least off of the open. We have rallied up and away from that. But remember, again, cover these trades on the open. All right. And I was able to cover those for 5 cents. So a nice little 45-cent profit in Cummings. And that's about it. Still keeping an eye on EA Sports. I'm going to be having a diligent eye on that today. Hopefully we can, like I said, get a little bit of a rally, at least closer to that 82 handle. And I will be a much happier person probably. All right, that's it. Tomorrow's webinar is going to be on the short put spread. I'll show you how to set that up. High implied volatility markets. It's great for that type of scenario, which we've been in and around lately. So check that one out. Also, if you missed yesterday, I did tiger shark trading. If you're newer to options, I go into one of the most important things to look at when trading options. So it's implied volatility. I go into detail for about 40 minutes in and around understanding just implied volatility and what that means to the market. So go to protraderstrategies.com and sign up for that. That's all I got for you guys. Hope to see you tomorrow. If you can't take that, take it easy.